well, I want to make sure that, my money is doing what it's supposed to be doing. And so the next level of that is called impact investing, where you invest in charitable organizations, but they are providing you back a financial return, but then they're also providing you KPIs on whatever they're involved in, whether it be some kind of social justice issue, or it's an environmental issue, or right, they're providing water. There's all sorts of companies that out there that do this, and I find that investors really like it, and it was really intriguing to me too. That, oh my gosh, I love this. I love that I could invest my money and be able to achieve more than just a financial return. So basically, I feel like my dollar is doing three things. It's kind of like the investing trifecta. It's bringing me back more money to provide impact for my family. It's impacting socially, and it's impacting environmentally.
You're listening to the Rich State of Mind Show, the podcast made to make you the total package in the entrepreneurial world and give you what we call a rich state of mind. If you are here looking to learn about real estate investing, marketing, elevating your business, and developing your mindset to get to the next level, then you are at the right place. Stay tuned and be sure to join our community on richstateofmind.com. Now here's your host, Anthony Ritchie.
Camilla, thank you so much for taking the time this evening. I think it's maybe a little early afternoon or late afternoon for you on the West Coast. If you could please just tell us a little bit about yourself and what you do.
Hey, thanks so much, Anthony, for having me here. So I'm a real estate investor full-time now. I just left my W-2 about 8 weeks ago, and I'm
congrats.
full-time here. Thank you. Right now I focus on group investing, which is, the fancy word for it is syndication, and where I provide investment opportunities to passive investors. And I really focus on educating passive investors on how to find opportunities, how to invest in things outside of the stock market, and to really add real estate to their portfolio.
Awesome. And so what is your role in your company, Steady Stream Investments?
I'm the founder and CEO of Steady Stream Investments. So my role is, wearing all the hats. That's what you do as an entrepreneur, right?
Yeah. And so how does that work with when you do your deals? Are you involved in every deal personally?
Yeah. So the way my company is structured is that I've joined lead sponsors, right? So a lead sponsor is someone who is established in a market and they've been working in a market for a while, and then I come in and I join them as helping to raise capital and then also do some asset management on the back end. And so that's the structure of what I do. So I partner with multiple lead sponsors in multiple markets, and so I can provide a diverse array of opportunities to my investors.
What's the most amount of sponsors you've worked with? And then the other word for it is like operator as well, right? That's the other fancy word.
Another. Yeah.
Yeah. So I've heard like 7, no more than 7, or as low as 2 and 3. What are your thoughts on that?
Well, currently I'm working with 4 different lead sponsors.
Okay, awesome. And so, like I was telling you earlier before we started recording, I was looking on your website and you talked about the 3 types of returns that you provide, and it's financial, social, and environmental. So what do you mean by that? We'll talk about the easy one, financial.
Yeah, well, so as I got more mature in my investing, I started thinking about really, what are we doing in this world? How can I create more impact in the world? And I stumbled upon this term called impact investing. And impact investing means it's like next level charity, right? So if you donate to a charity, typically there's nothing you get back from that, right? You're just simply donating. And often you don't really know exactly how the money is being
Yeah,
used.
it's
And
not
there's
measurable. Yeah.
yes, there's no measure, there's no KPIs that they're reporting back to you. So it kind of feels like it goes into this black box. And so there's been a lot of skepticism with charities lately that people are like, well, I want to make sure that my money is doing what it's supposed to be doing. And so the next level of that is called impact investing, where you invest in charitable organizations, but they are providing you back a financial return, but then they're also providing you KPIs on whatever they're involved in, whether it be some kind of social justice issue, or it's an environmental issue, or right, they're providing water. There's all sorts of companies that out there that do this, and I find that investors really like it, and it was really intriguing to me too. That, oh my gosh, I love this. I love that I could invest my money and be able to achieve more than just a financial return. So basically, I feel like my dollar is doing three things. It's kind of like the investing trifecta. It's bringing me back more money to provide impact for my family. It's impacting socially, and it's impacting environmentally. Now, how does that translate into like real estate, right? Because that's my industry. That's the industry that I choose to invest in. Well, simple. If you buy an apartment complex, for example, of course, there's going to be a financial return, right? We always get a financial return with real estate. That's why we all love it and we invest in it.
Yeah.
But how do you get a social return? Well, you get a social return by really focusing on the resident experience. It's not just about trying to squeeze every last dollar out of there. It's not just about going in there and trying to increase the rents to the maximum that you could increase them. It's really figuring out what is the right thing for this community and being more involved in the community. And you can partner with nonprofits and have them, provide housing for, like veterans in transition, or, women who need some help with when they're in transition as well. So that's a way you can do social return. And then environmental return is really cool in large apartment complexes, because we can do things like reduce the water consumption of that building. We can reduce the energy consumption. We can really be conscientious about how, if we go in and renovate units, what are we doing with the garbage? Are we recycling, or are we just dumping it in a landfill? What are we doing to really be more kind to Mother Earth?
And that's why I like multifamily. And I was telling you earlier how I do multifamily residential versus commercial. And I have one single family home. And the big difference that I've noticed in just that experience, and I know it's tenfold when it comes to, 50, 100 unit, is you can make very small changes per unit, but then it reduces the major bill. So I'm assuming with this 100 unit, you have a water bill. But if I change, and let's say I make I put water efficient shower heads in each bathroom in the entire building, then that probably greatly reduces my water bill. And so I like that. You see the change. I think you can see it better on the chart, versus, all right, well, if you did a single family home, you probably took like, probably $1 off. But if you do that 100 times, now you see $100. And so that helps with your margins. And that was just a small change. So that's why I like it. And I'm glad you talked about investing that creates an impact, and how you can change communities. And back in episode 50, I talked to an individual named Julie Holly, and she talked about how you can completely change an area just by creating affordable housing. Because especially with inflation, right? Recently, the job that you had paying you $12 an hour doesn't obviously stretch like it used to. So where are these people living at? Because everybody wants to live someplace safe, someplace that's reliable, has, appliances and things it doesn't have to be luxury, but it's of quality. And so there is a way to meet your margins, and to where, yes, you're not maxing out your rents, obviously. But if you look at everything and did the math, you could do $50 underneath the market value and still make your profits while still being able to put people in affordable housing. And I love that. That is, I think, putting real purpose behind what you're doing, and it's not just about the money. And I don't knock any entrepreneur that does that. I really don't. But when you could, like you said, when your money could do three things at once, I think that's fulfilling.
Yeah, for sure.
And so when you have these deals, how many deals a year do you do?
I do 5 or 6 a year.
Okay, so when you do these 5 or 6 deals a year, how are you presenting this? What are you presenting to an LP? Are you presenting like a PowerPoint, some type of one sheet to persuade during your capital raising timeframes? What are you doing?
Yeah, I go through a process. So the first thing that I do is I send out an email that has a deal alert. And within that email, the body of the email, it will talk about why we love this property, what changes we think we can make to this property, what we think we can achieve as far as returns go for a passive investor, and why they should consider investing. Along with that, we do have a PowerPoint presentation that walks them through the whole process. And then we'll hold a webinar, and we'll do a live webinar where investors can join, and we'll walk them through the whole presentation deck. And then after the webinar, we have an investor portal where they can go and find all the information as well. So multiple ways of communicating to investors about the opportunity.
Awesome. Awesome. And so within that, are they able to communicate with each other and somewhere in that portal?
No, they're not. They're not able to communicate with each other.
Okay, I'm gonna keep that idea in the back of my head when I start.
Yeah, well, you have to consider investor confidentiality as well, right?
Okay. Also, and so, well, speaking of people having so much, access to this portal and to you with your master class, I noticed that it was free on there. What information are you providing there on your website?
Yeah, the master class is called Passive Investing Made Easy. I think sometimes when people first get wind of passive investing or syndications, it feels pretty overwhelming because it's a brand new concept, right? It's something, and it felt that way for me. I'd been an investor for 15 years, doing lots of single family and small multis, and then I was trying to figure out, well, how do you buy an apartment complex? And that's when syndication came up. So I was and it was a lot. It was a lot for me to learn, and I felt like I was already experienced investor. So my goal is to really just strip it down to the basics. Here's what you need to understand. Here's what you need to know to be able to start investing. And then just know that you're going to continue to educate yourself, and you're going to become even more and more sophisticated as you go along. So passive investing made easy is basically everything you need to know A to Z to be able to invest passively in a syndication. And I even included in there a 10-year plan, right? So if as a
Okay.
passive investor, what would it look like if you invested every year into a syndication, and how what would your net worth be in 10 years? What would your cash flow be in 10 years if you were to be disciplined enough to invest in one per year? And it's pretty powerful. It's a pretty powerful thing in that course.
I can see how you could easily be a millionaire, depending on what your entry point is, 25K or 50K. And a
Mhm.
lot of the deals I've seen, hey, in 5 years, you get your money back plus double, and then you were getting, your interest. Yeah, I can see how that works. I like that. I've never heard of an operator uh, putting it like that to where, hey, this is in 10 years, this is where you could be at. I think that would be very useful. It gets people kind of excited, like, okay, one a year.
Yeah.
Okay, I think I could do that.
Yeah. Yeah. And for sure, you can do that.
Yeah. You got my mind churning now, like, I'm gonna have to check that part out now. And so,
Should.
okay, say again.
I said you should. Yeah. Check that out.
And so you do 5 to 6 deals a year, and so that's a
Mhm.
lot of risk, right? And so, how do you mitigate your risk to ensure that each deal, not necessarily is a home run, but is successful?
Yeah. Yeah. So there's a couple of many steps actually that I go through. So because my model is such that I partner with other lead sponsors, I feel like one of my duties to passive investors is to thoroughly vet those partnerships. And so I put them through a process, a vetting process. I want to know what their track record is. I want to know what are the last 5 deals that they've done, and how many have they exited, and what's that from what they projected, what's the difference between what they projected to investors to what they actually gave investors when all was said and done. I want to understand their background and do background checks on them and things like that. So that's a big way to mitigate risk, is to partner with strong teams that know what they're doing, that have done it many times over, and have are very established in that market. So I do a vetting process for the sponsor team. The next thing I do is I vet the market, and I make sure that the market has really good fundamentals, things like population growth, job diversity, a favorable environment for landlords, et cetera. So the market is really important. And then finally, the deal itself. So, what's the business plan for the deal? Is it achievable? And I'll dive into, the comps, into what they're planning to do, and really vet that. And then I'll do my own underwriting as well. So I do a full financial analysis on every property. So those are steps that I take to mitigate risk in it. And we all know there's risk in every assessment or investment, sorry. And in every real estate investment, we know there's going to be challenges, right? You're kidding yourself if you think there's not going to be some big hurdle that you're going to have to go through. All of us as investors have experienced it. But I think the nice thing about us that have experienced it is we've weathered storms before. And that's another thing I want a sponsorship team to have done. I want to know what's been your worst investment, and and what happened there, and how did you approach it, right? Like, it doesn't bother me if they lost money before. I've lost money before on investments. Like, I made a crappy investment early on in my investing experience. But how did they recover from it? How did they approach it? How did they resolve the issue? And were they prioritizing investor money at all times? Those are some of the things that I look for.
And so when I think about, your vetting process, let's say this is my first time being an operator, but I do pair myself with people that are very experienced. Is that okay with somebody like you that vets?
Yep, 100%. I'll vet the whole team, right? And so I don't have a bias against newbies. It's okay to be new in this industry. And in fact, I welcome new people into the industry and talk to them all the time. But I do want to make sure that a new person is partnering with an experienced person. So it's not just a whole team of new people, because that's more risky. It's not saying that they're going to fail, right? But it is more risky than experienced people.
No, I completely understand. And, as I've been learning more and more, actually the trend in the season 3 for my podcast has been syndication and the different ways to be able to attack it. And as I've been talking to each and every person, I find there's definitely more than one way to skin a cat, if people still say that saying. And I do appreciate the different angles you could take on it, and the different backgrounds I've noticed that people have before they got into it. Mm-hmm. And at the level of professionalism, I appreciate for those that, started off with, residential properties, single family, multifamily. You sometimes feel like it's like, can you just take this is my 5,000, but to them that 5,000, whoever you deal with, contractor, property manager, the level of professionalism is not the same that I've seen when I've seen some of these syndicators deal with these large property management teams, these large contracted teams, right, where millions of dollars are on the table. Their reputations are on the table because this is a small community, and I like that. I like when everybody has a lot to win, a lot to gain, and a lot to lose just because of your name and reputation. Because I know I'm going to hold my end of the bargain. But it sucks when you're going to be the one that has integrity, when the other person, you're not so sure, right? You take risks. So that's the space, and why I told you earlier, one of the reasons why I like to transition over, just a different level of professionalism that I'm looking for, and customer service, because I try to give everything that I'm doing, everything that I do, I try to give it my all and to the best of my ability. Even if this is my only single family home, it's my only property, right? I'm going to act like I've been a landlord for 10 years and try to be as professional as possible. That's how I believe. So you've also extended that belief of, hey, this is fun, and, but at the same time, this is also business, and we are to do our due diligence as well. And I love that, especially at that level. Real quick, you talked about how, you've been investing for 15 years, and then you said you've been syndicating for the last 3. Tell the audience a little bit of what made you transition, and why did you transition over?
Complete burnout, right? So as a single family investor, Well, and I was a DIY single family investor,
Mm.
right? Literally doing everything ourselves. So we would go and fix the toilets. We'd take the calls at 2 a.m. We would mow the lawns and turn the units ourselves. So it was a lot of work, and it was a lot of time on my part. So 15 years in, we had acquired a nice portfolio. But I'm looking at this portfolio and looking at all the time it takes to manage it, and I'm really frustrated because we also have 5 children, and so I'm trying to figure out, well, how do we navigate this? And I really wanted more time with my family, and that's when I thought, oh well, I'll just buy an apartment complex. So I'll sell all these single families, and I'll buy an apartment complex, and then I'll be set for life, right? Well, the problem was that apartment complexes are a very different ballgame than single family, and it's not really something that you can buy on your own. I mean, a few people can, if you have really deep pockets and you have enough experience, but there's very specific requirements on loans to even buy a apartment complex that me as a single family investor with a nice portfolio, I didn't qualify to be able to sign on the loan by myself because I'd never run an apartment building before, right? Like lenders don't believe that single family investors can run apartment buildings. It's because it's very different. So you have to have a partner. And so that's when I started thinking, okay, well, if I have to have a partner to buy large multifamily, what does that even look like? It was scary for me, to be honest, because I'd never had partners before, just doing everything myself. And so I'm trying to navigate, well, how do you find partners? How do you do that? And then when I realized that you could join as a passive investor, that's what I did first. I'm like, oh yeah, I'm doing that immediately. I'm going to jump in as a passive investor because that at least gets my foot in the door,
Yeah.
helps me understand the model. I can start learning from the lead sponsors who are running this deal, and it gets my money working. And I can say, hey, I'm a part owner in an apartment complex. Like that was my goal, right? To own
Yeah.
an apartment complex. Well, I own one little piece of it, but I own it, right?
Yeah.
And so that was when things got really exciting for me. After I invested passively, I was like, oh my gosh, this is amazing. I know there are thousands of people just like me who are burnt out landlords that are just trying to figure out, well, what do we do next? Like I still believe in real estate, but I'm tired. I want my time back. I want my freedom back. And so I launched Steady Stream Investments to really just educate other people like me how to join as a passive investor and still get all the amazing benefits of real estate that we all love: cash flow, tax benefits, appreciation, but do it on a much more free scale. Just be a professional passive investor. Like, isn't that the dream? We all have the dream, right? Like, just invest and then we can do whatever we want.
Yeah. And I love that about being a limited partner. The fact that not necessarily, pay your money and then you completely detach, but yes, you're not getting a 2 o'clock calls about a plunged, toilet needs to get plunged or plumbing. Like I have my tenants through the Build 'em app, and so they send me trouble tickets through the app, and they take pictures and videos, and so that makes things a little bit more convenient. But I still have to make the phone call and orchestrate the guy being over there and stuff like that. So even that part, I'm kind of like, I'm done with right now. So I try to make my life easier though. But LP side, like you said, you are part of a bigger pie, and you still get your dividends. Some people pay quarterly, or you have to wait a couple of years or before you get it, depending on the deal. And you really got me thinking about that, trying to do one a year. I think I got to look at your chart because I want to chew on that at some point, because I'm pretty sure the numbers make a good amount of sense. And I would love to compare that to if I put my money in the, S&P 500, our IRA, and see how that would work out in comparison to the averages of what you get on, syndications. So I think that's a pretty good thing. People that are listening, think about that. Compare, stock market, your returns on that in comparison, and look at some syndication deals, what those returns are over a span of 10 years, which is usually the rule of thumb is if you double your money in 10 years and you did a good investment. So look into that and compare that. I think that's going to be a cool comparison. I'm kind of biased because real estate's my thing. I play with cryptocurrency, but I'm a believer in sticking to what you know and really getting really good at it, and then dabbling in other things with some play money, and if it works out, okay, cool. I'll go a little bit
Yeah.
further at it. But one thing I want to make sure I ask, and I try to make sure I always ask everybody, I don't want to forget this, is what is your rich state of mind? What's your big why as to why you like to be able to, with your money, service three things at the same time, impacting the community in a positive way? Why does that mean so much to you?
Well, it means a lot to me. I think one of my experiences investing was in a single family home. Was we bought a HUD home and we rented it out to a Section 8 tenant. And a lot of people around me were like, "Yeah, don't do that. That's a bad idea. That's a bad idea." I'm like, why is it a bad idea?" And so I went for it, and it was a single mom with three kids, and she was the most amazing tenant I've ever had. And it was phenomenal because every time I would go over there and chat with her and talk to her, we were able to develop a relationship. She was just so grateful to have a clean, safe home for her and her three kids. And that made such an impact on me that I was able to provide that for someone that she couldn't provide for herself. And I know the government tries. I know they try really hard to provide housing for people in need, but really, I think the capital world can do a better job of providing this housing that is in such dire need. We're coming into an affordable housing crisis, and I feel like that us in the capital world, we can make huge dents in it if
Oh
we would
yeah.
just try. And so that's really what means a lot to me. And then just also making an impact on my kids. So like I said, I have 5 children, and I think every parent looks at their kid and they're like, "Yes, kid, go for whatever you want, right? Believe in yourself. You can do great things." And we cheer for our kids. But let me ask you this, if they don't see their parents trying to achieve great things and working on things and being examples of achieving greatness, how do they know they can achieve greatness,
Hmm.
right? And so that's another big why for me, is I want to walk the path and show my kids that you can achieve big things even when it's hard, right? Because they see the hard days that I have, but they also help me celebrate the good days that we have. And it's just phenomenal. It's phenomenal to work together as a family towards some big goals.
I love that answer. And like I said, not that any answer is the right answer, but I love how genuine it is. And I was definitely relatable. I've had some HUD tenants as well. And I've definitely, like I said, I was earlier when I was talking about syndications for episode 50, told a little story about how during the pandemic, right, how I said it burnt me out a little bit. It was because it was a lot of getting very personal with a lot of my tenants,
Mhm.
trying to figure out what was their issue, where were they hurting at, and so how can we ensure that everybody wins in this situation. And there was a lot of rent relief programs during the process, during the pandemic and stuff like that. So definitely interesting time. If you ever were detached from people that were in need, I think during that time frame as a landlord, you probably was a little bit more in tune. Uh, Especially if you probably had no choice because your pockets were affected, so you probably had no choice but to kind of figure out, like, okay, what's
Mhm.
going on here. And then when you see what people are going through, like, oh wow. I think like you mentioned, in the capital group or in people that are used have been for several years have been amassing wealth and used to living a comfortable lifestyle. Sometimes there's some things, depending on your background, we forget, because
Mhm.
to some of us, like there's an episode on Succession. I don't know if you watch that show on HBO, where one of the billionaire family, and one of the kids is like, what's a gallon of milk cost? Nobody knows.
Really?
Yeah, nobody knew. And that's how kind of detached they were, right?
Yeah.
But every once in a
Yeah, that's
while,
interesting.
yeah. And so I always try to make sure that I never do I want to experience maybe a poverty like I used to as a child, maybe, or any type of struggle. But I always ensure that I keep the humane side of me intact, so that when it comes to being a landlord, and it comes to be a real estate investor, I think that's a piece of you that you need to keep, because this is not just a house that you're building or renovating or buying and then robots are going to live in it. People are going to live in it.
Yep.
And so that's my thought process on it.
Yeah, for sure. The resident experience, I think, is huge, and not just for the A-class properties, right?
No,
Or the
yes.
D-class properties, the C-class properties. They still deserve a really great experience, and that's what I'm trying to achieve in all of my investing that I do.
Awesome. Thank you so much, Camilla, for taking the time. We really appreciate you. And I can't wait for this episode to post because I like it when I have operators come on board, or you CEO and founder, so that people can go check out your website and join your team. And definitely check out your masterclass as well. Love the fact that it's free and it's going to be probably a wealth of information. I'm going to have to sign up and get on the email list myself. Thank you so much.
Yeah, thanks so much for having me. It's been great chatting.
Awesome.
Thank you for sticking with us from the start of the episode. Please share our show with friends and family, visit our YouTube channel, and view more of our content on richstateofmind.com. See you next week on the Rich State of Mind Show.